the future of pharmaceutical stocks and how much of their portfolio should they be allocating to pharma?
See, I think in the Nifty about 4% weightage is there for the pharma. But I think that the industry is in a cyclical upswing. So you could go a little higher in terms of weightage. But pharma is a industry where you need to be extremely selective.
Hey guys, welcome to the 20th episode of the Indian Market Story. We're back to our stock market roots with returning guest Mr. Dipan Mehta, here to talk about the pharmaceutical industry. A really interesting part of the Indian market story, something that's been a substantial wealth generator and a huge sort of export income as well, right?
Yeah, that's right, Varun, but very few people understand it. It's such a complicated industry with such long product names that you can barely pronounce it. And it's an industry where India has an advantage, and India has created great deal of scale. And I would say after software, we are known for our pharmaceutical exports and pharmaceutical products. So it's a great sector to discuss on these podcasts. And many investors would be having shares of pharmaceutical companies because Indian pharma companies have been around for a long time, for decades.
Yeah.
It's not like a new age business like like software or retail or healthcare. These businesses have been around for decades. So many investors would be holding shares of pharma companies. At the same time, a lot of pharma companies have been great value creators. They've been multi-baggers until about 5-6 years ago or so. But so I think it's a good topic to discuss.
Yeah.
What are your thoughts here?
No, absolutely. So my understanding of the pharma industry is that there's three or four giants: Sun Pharma, Cipla, Ranbaxy, or maybe what used to be Ranbaxy that got
to Sun
merged.
Pharma,
Yeah,
Dr. Reddy's,
Dr. Reddy's, a
Divis
few more. Yeah,
Laboratories.
and a lot of these have their roots lie in exporting generic pharmaceuticals to the US. Is that correct? Is that where the origin of the Indian pharma company started?
See, actually, if you go back to the origins of the Indian pharma company, then from a shareholder's perspective, from a listed space perspective, it started with the MNCs. So there was Glaxo, there was Pfizer, they still are. There was Abbott Laboratories, Novartis. I think these were the large pharmaceutical companies and multinational companies which got listed because of FERA. They had to compulsory dilute the foreign holding. And that's how the journey of the listed pharmaceutical space started in India. And these companies were great value creators. The beauty of these companies to date is that they are very strong brands. I mean, we keep talking about FMCG brands like Surf and Parachute Oil and Colgate and Palmolive and stuff like that. But some of the products which are there of the MNC pharma companies, they may not be household names, but they have been been around for a long time with a huge following by the doctors in prescribing them. Like Flam, which we take very regularly from time to time. Crocin, for that matter.
Yeah.
All these,
Vicks.
Vicks, all of these are foreign brands. I mean, so the story of the Indian pharma industry was started by the MNCs. When they got listed, they created a lot of value. Then the Indian pharma industry also came into existence. And there's a very important, I would say, regulation which the Indian government passed many decades ago, whereby we did not accept product patents, but we accepted process patents.
Right.
So there's a process of making the entire molecule. So the MNCs had a patent protection of the process, but not of the end product.
Right.
And that I think was a very wise move on the part of the Indian government, because that was the foundation of the entire pharma industry. Because what companies like Cipla and Dr. Reddy's and Ranbaxy at a point of time, Dipan, Sun, what they did was they found the product, the actual molecule, which was required by the Indian market, and they reverse engineered it to produce it from a different process. So they were completely compliant as far as Indian laws were concerned. So they actually mastered this art in India, in the Indian market, and they started launching brands of the same products that the MNCs had in India and started gaining market share.
Mhm.
Their products were fabulous. There was no quality issue. But the same, whether it's a Crocin or whether it is, I would say, Combi Flam or any of the other tablets or capsules, they started manufacturing the same thing with a different brand name.
Mhm.
And that's how they got extremely successful. And now these companies and their brands, which are homegrown brands, those also have become kind of very popular with the doctors per se. So the birth of the Indian pharma industry was from there, and it has created many very, I would say, very successful entrepreneurs over there.
No, that's really interesting. So, why don't we dig into the unit economics and the business structure of the pharmaceutical space?
Yes, absolutely.
Because I think that's maybe the first point you want to try and understand if you want to understand a business. So, could you maybe walk me through what the large cost structure and what the large revenue sources are for a typical pharma giant? And let's maybe take Sun Pharma as an example. Whether it's investment in plants, investments in materials, um, investments in R&D, and export versus domestic market. Let's try and break this down in a really simplified way for people to try and understand.
Yeah, that's right. So let's go back to what I said just now, that the Indian pharmaceutical companies started manufacturing the same molecule, rebranding it within India. And then came the huge opportunity in US. So what was happening in America right from the 1990s to 2015 is that many large molecules, they went off patent over there. Now USA has a product patent and a process patent.
Mhm.
So therefore, unless the product patent and the process patent, unless the product patent is not over and done with, you cannot market, have a generic version of that molecule in the US.
Mhm.
But I think there were so many discoveries in the 60s, 70s, 80s. So by the time they came to the
Mhm.
2000 decade and the 2010 decade, humongous number of molecules were going off patent.
Mhm.
And the Indians already had mastered the reverse engineering art of manufacturing those molecules. So all they had to do was get their plants US FDA approved, easier said than done, and then start exporting from India onto the US. And the margin of profit was like 10x.
Right. Yeah.
So it was like a absolutely no fabulous opportunity for Indian companies that they had the running plants which were manufacturing the same generic molecules for the Indian market. They got those plants US FDA approved, which was great because they improved the manufacturing process, and they started exporting it straight away to the wholesalers in
Mhm.
USA, and they were making huge amount of profit. Now, as and when more and more competition got into it, obviously the prices went down, the margins went down, but the number of molecules going off patent kept on increasing.
Mhm.
So while there was, I would say, decline in prices on the existing molecules, but new molecules kept on coming in. And then Indian pharmaceutical companies went up the value chain. They started going into injectables. They started getting into some of the other more sophisticated pharmaceutical products, biologics as well. And that's how the entire pharma industry really flourished. As to your cost, the major cost for the pharma company, of course, after raw material and manufacturing cost, is R&D. Now you may ask, what is this R&D spent on? It's not new molecules. This R&D is spent on getting the approvals for the generic drugs going off patent in US and elsewhere in the world. So that's the biggest cost for them.
Mhm.
And the biggest risk factor and a cost for the Indian pharma companies is keeping their plants US FDA compliant.
Right. So, what I'm understanding from what you're saying to me is that the US FDA compliance was one of the major things that a company had to get right
Absolutely.
in
Yes.
order to become and stay profitable. And
Absolutely.
if my research serves me well, Sun Pharma was one of the better companies that had this process and this understanding of how to get a plant FDA approved.
Sun, Dr. Reddy's, Cipla, Lupin, Glenmark, they all had mastered this art.
Right.
To an extent, Wockhardt as well. Then a second line of pharma companies came, like Ipca Laboratories, there was Kaplan Point. Then there was, Glenmark, I would say, was a tier two company. Alembic Chemicals, and at least 15 other such second rung Indian pharma companies. Looking at what the Sun Pharmas and the Lupins and Doctors are doing, they also got into the act and started building US FDA compliant plants. And now I would say there are at least 25, 30 solid Indian companies which have huge exports to the US market. And then, of course, once you crack the US market, getting into rest of the world, Europe is fairly easy. So that's where we are. There was Aurobindo also, which is another success story. They focus purely on the export markets. So I think each company that we talk about had its own nuance and its own strategy. So the MNCs only Indian market branded drugs. Then there were the Indian companies which looked at the Indian markets as well as exports to US, and they built their plans accordingly. And then depending upon the product profile, they would either have 60-70% revenues coming from India, 30-40 from abroad, or vice versa. But broadly, as a thumb rule, one third, one third, one third. The top 3-4 companies in India, one third India, one third US, one third rest of the world was the breakup of their revenues.
Very interesting.
Yeah.
So now that we have an understanding of the industry, and we know it's worked well for the last 20-25 years, since the 90s effectively. So what's been going wrong over the last few years?
That's one of the most important questions you asked, Varun, that what's been going wrong. And I think the market took a while to understand what was really going wrong. And one thing I'll tell you, having been in the stock market, that managements do not really give you the right signals or the warnings that there's something fundamentally changing, structurally changing in their industry. Maybe they don't know it, which I don't believe, but generally they don't guide the investor as well as they should. So what has gone wrong? So as I told you, that a large portion of the revenues came from the US generics market. And once a molecule went off patent, and maybe 5, 10, 15 years ago, there would be 3 or 4 players. So competition was limited. Now what happens if a molecule goes off patent within 6 months' time? We've got 10, 15, 20 people manufacturing the same molecule. Because everybody's mastered the art of setting up a US FDA compliant plant, getting the approval from US, setting up the entire manufacturing and the supply chain, and then having a kind of a relationship with the wholesalers over there. So the competitive intensity increased drastically because more and more capacities came up. Secondly, within US, there was consolidation amongst the middlemen or the wholesalers. So they got more bargaining power over there and they played one against another. And therefore, we were seeing continuous erosion in the end product prices. It would be ranging from 8% to 25% per annum. Means what was available 100 rupees became available 75, 50, then 30, and now 5 or 10. So the margins actually got compressed. But this is not new, Varun. What used to happen is that this was a process, it was happening. But there were many new molecules which kept on coming and therefore the pharmaceutical companies could compensate for lower margins through more products. But now even new molecules, I mean, there was a huge number of molecules going off patent, but that number also has dwindled. So now it's become a largely commoditized business, largely B2B business. And therefore, with the absence of new molecules coming in, volumes also have suffered. And therefore, we are going to be in a situation last 3, 4, 5 years, I would say, that Indian pharma companies have not done as well. We have seen stagnation in their profits. Many companies like Lupin, Sun Pharma, they have gone in for large ticket acquisitions which have not worked out well for them. Even Aurobindo, for that matter, some of them they sold off. Others they are just still, trying to get the economics right over there. So that's what has gone wrong with the Indian pharma company. And within the Indian market, I think the companies which focus largely on the Indian pharma market, they, I think, did well last 4 or 5 years or so. MNC companies have done really well because over here, the competitive intensity remained more or less the same. So the real problem was the export markets for the Indian pharma company. And fortunately, I think what we are seeing now is that last 2-3 quarters, the price erosion has certainly decreased a little bit. Okay, because everything which gets commoditized then starts to have its own cycle, as you know, and you know about the cycles that more capacities come on stream, so competition increases. Then people find it's not viable to manufacture, so they switch to other products, other markets, so competitiveness comes down. And that process is going on just now, which is why we are getting much better numbers from the likes of Sun Pharma, Cipla, and Dr. Reddy's over the last 3-4 quarters or so. So as far as the whole industry is concerned, but there are many other nuances also we can talk about.
So if I'm understanding what you're saying correctly, because of the challenges in the export market, pharma companies in India have suffered over the last 3 to 5 years. But the last 3 to 5 years have also seen a major health event that's created a lot of long-term tailwinds for pharmaceutical companies generally. That's COVID. That's something we've all
Yeah,
lived through.
absolutely. Yeah. Yeah.
So on one hand, yes, you had a lot of companies that aren't able to make molecules, but India's been the vaccine hub of the world, from what I understand. Are these companies not able to capture that, or is that captured exclusively by a small set of companies like, let's say, Serum Institute of India? So what's the future trajectory for these pharma companies?
So first of all, I think we had a major health event, the COVID, and we India was amongst the largest manufacturers of vaccines. But Serum Institute is not listed. Had it been listed, I think the stock price would have skyrocketed. And of course, I think that because of this particular health, I would say catastrophe, for lack of a better word, the pharma industry did do well. Certain molecules did do very well in the US, but largely because many of the electives
Mhm.
surgeries were not taking place, because many people just didn't go to doctors because of COVID for normal
Mhm.
illnesses. To that extent, there was some impact, negative impact as well on the Indian pharmaceutical companies. But in India, I think from what has happened post COVID is the realization of how important healthcare is, how important diagnostics is, how important it is to get the right medicine at the right price. And that I think is the long term benefit which Indian pharmaceutical companies will get by supplying in the Indian markets per se.
Let's maybe start talking about the specific companies that are doing really well, both in the foreign market and in the Indian market. And maybe we'll start out with, again, the largest, the gorilla in the room, Sun Pharma, a company that's done really well, in terms of getting their factories approved by US FDA. So, would you like to maybe talk us through the history of Sun Pharma, both from a a business perspective as well as a price perspective? I know you've been invested in them for a long time.
Yeah, absolutely. I think, and Dilip Sanghvi, who is the promoter, founder of Sun Pharma, extremely low profile entrepreneur and created great deal of wealth, very high ethical standards per se. And his journey started by manufacturing branded generics for the Indian market. And they did some very interesting acquisitions early on. They bought Crossland Laboratories and they bought two, three other smaller pharma companies. They bought some US companies or pharma companies in America as well. And then they had this Ranbaxy, which was a very big acquisition for themselves. And that did not really go well
Mhm.
because Ranbaxy had many legacy problems. But nonetheless, I think because of Sun Pharma, what it is and its management quality, they were able to absorb it and get out of it. Now, Mr. Dilip Sanghvi is a very, I would say, visionary, and he looks many years ahead. And his strategies at in the beginning are difficult to understand. Like when he started exporting to US, you couldn't understand what is exactly happening over there and what the potential is. But they were amongst the first to export generics to the US on a large scale. Then others followed. So the big mantra for Sun Pharma just now is specialty products.
What specialty
Yeah.
products?
So specialty products is actually branded non-generic products in the US market. Okay.
So, like
So
proper branded patented pharmaceuticals.
yes, yes. So they are actually getting into the turf of a US pharma company.
Wow, okay,
Yeah,
that's
wow,
dangerous
that's
place to
wow.
be.
Yeah, but they're not looking at big ticket products. They're looking at smaller products. Could be in skincare, eye care, you know, hair fall, stuff like that, which are niche markets. Okay. Some of the brands they've acquired, some of the brands have developed themselves. They've got some amount of patent protection, not completely, and they're trying to grow those specialty products business through feet on the ground, through better communication to the doctors, trying to find alternative uses of the same products. And it's a whole host of, it's a very long term strategy. But what it protects is that eventually, once you've got that product in place, you've got it branded, you've got that following from the doctors, then it can scale up really well. And at least you have got the pricing power over there.
Mhm.
So the margins are higher once the R&D costs are over and done with. So Sun Pharma is gradually trying to increase its percentage of revenues from the specialty products. Right now, I think 15-20% or so, but it'll keep on going up. So then they crack US and they go to Europe, rest of the world with the same product. So that is their strategy. Focus on India. India is like a cash cow for Indian pharma companies. You just keep on launching new products and it generates the cash flow. But the growth comes from, as I said, for
Foreign
Sun
markets.
Pharma, from specialty products, and before that from US generic exports.
From what you described to me so far, it seems like they started out at the bottom end of the value chain, providing generics for the Indian market, and they've moved a layer up.
Yeah, absolutely. You said it really well. Let's go on now.
Yeah, they moved a layer up and they provide generics for the US market, and now they're trying to provide patented, developed solutions for the US market. So they're moving up and up the value chain.
Absolutely. You can imagine that if they're successful at it, 3-5 years from now, 60-70% revenues come from specialty products. Can you imagine what value they will create?
Yeah, then they'll be worth like a full scale American pharma company.
Global pharma
Company. Yeah. That'd be very interesting to see if it works out. So hopefully our viewers can see a full financial profile as well as a little bit of the price performance of Sun Pharma on their screen. But where do you think, initial signs, do you think the strategy is working out? What's your opinion on where this stock's going to go in the next 3 to 5 years?
First, disclosure, as usual, and this is not a recommendation, but these are great companies to have in your portfolio because what they're attempting to do, if they're successful at it, even I would say 60-70% successful, they will still create a lot of value. They will have a lot of predictability in their earnings. See, as investors, we like the predictability of earnings. Don't you think so? You want a company which keeps on generating profits year after year, 15-20% higher. We want such companies.
Yeah.
So Sun Pharma could be, one of those classic companies, which if they get the specialty product right, then they can keep on growing gradually. And it's a learning process. They got maybe a handful, 5-6 products, but they can go to 30-40 products. Then what happens? So that is one thing about Sun Pharma, which I really appreciate. The differentiated strategy.
Yeah. So let's maybe move on from Sun Pharma. I think we understand, what kind of a play this is on the Indian pharma space. I think Cipla is the second biggest company, if I'm not mistaken. Is Cipla also following the same strategy of moving up the value chain?
See, I think looking at Sun Pharma, and the writing was clearly on the wall 3 years ago, 4 years ago, that the typical generics exports are not going to work out. So Cipla, Dr. Reddy, Lupin, they all had strategies to move up the value chain. So one of the first things like companies did is they went into injectables. Cipla went into a lot of the products which go for, I would say, pumps and, for, what is it called? Any breathing related issues, asthma related drugs. So they went into that direction. Lupin acquired a company which was very strong in injectables. Dr. Reddy's also tried to focus on niche products, high value products, difficult to manufacture products. So all of these companies actually try to do the same thing, but no one has gone to the scale and the depth at which Sun Pharma has gone. And because of the way the pricing has happened in the US generics market, the likes of Dr. Reddy's, Sun, Lupin, the prices have stagnated. It's only now that because we have seen little less intensity and prices going up, that the performance has improved. But Varun, I wouldn't bet too much on the likes of Dr. Reddy and Lupin and Torrent and Zydus, Cadila. They are not in the same league as Sun Pharma.
Yeah. If I understand the pharma business particularly well, and I don't claim to, moving up and up the value chain requires a more intense R&D expenditure.
That's right, you got it, R&D, and that requires a lot of perseverance. You see, you run a business, you want your shareholders like us, they want instant returns. So how do you manage the expectations and still invest in R&D? And isn't R&D a big risk factor?
Yeah, and that's why you need scale to absorb those losses and persevere with that high degree of investment. So it seems like pharma is very much going to become a winner-take-all strategy.
It could be, yes. And what will happen over time, Varun, is that because the entire business is getting commoditized, as we discussed, the street will not pay a higher price to earnings multiple.
Yeah.
I mean, we are talking about the companies, but let's talk from the investor's perspective. That if because the price, end product price are going to fluctuate and there's going to be competition and plants starting and closing, and if there's going to be earnings volatility, then I'm not going to pay the same price to earnings multiple.
I think we're trying to show maybe a comparison of the price to earnings of your Sun Pharma, Cipla, Torrent, Aurobindo. Any others you'd recommend?
Zydus, Carilla.
Zydus. So we'll try and maybe show this to our viewers so they can see exactly what we're talking about when we say that the street is not giving these companies a high price to earnings multiple because there's no stability in their earnings and there's no expectation of those high margins.
But let me put it in context for them. See, when you look at the price to earnings multiple of these companies, it'll be around that 20 to 30 times or so. Okay. But put in perspective that good Indian companies are also trading at those levels. And if you go back 5-10 years ago, pharma stocks were trading at 30-40% premium price to earnings multiple.
Got it.
So on an absolute basis, you may find that it's not that expensive or it's not that cheap. But when you look at from the point of view that where what a premium they were trading at earlier, now they are more or less in line with the Sensex and Nifty equivalent type of business model. So, and also there's a lot of volatility there. Like Dr. Reddy's now, they had a super molecule last 2 quarters. So their profits have zoomed up. But then the profits will start to come off once that molecule, gets more and more competition in it. So that's the kind of volatility in earnings, which as investors, we don't really like. But it'll be evident, as time goes by. So that's as far as these larger companies per se are concerned.
So I have a question, right? We've discussed these larger companies that reverse engineer molecules, export them. Now they're moving up the value chain. But there are companies in this space that started at the top of the value chain or are trying to do something different. And two names come to mind that I want to hear your thoughts on. First is Biocon and the other is Mankind. And I think Mankind is a recent IPO that received a lot of attention. And Biocon is, a bellwether of the Indian pharma sector. But I want to hear your thoughts on both these companies.
And if I may add, I want to talk about Divis Laboratories also. Another massive value creator amongst the best. After Sun Pharma, the second company which has created maximum value, I think, is Divis Laboratories. So let's go step by step. Let's talk about Biocon. So Biocon also had a slightly differentiated business model and they focused on biologics. And to an extent, they use the fermentation technology to manufacture certain molecules, which are difficult to manufacture. And because they captured the entire manufacturing value chain, the margins were also higher. And they had a tough time getting those molecules approved by the US FDA. And now that has got done, they are really seeing the benefits of it. I think quarter after quarter, they're reporting better and better earnings. Of course, again, there's some volatility.
I think once again, we'll try and show a snapshot of Biocon's financials on the screen, just to highlight the point you're making about their consistent revenue growth.
Yeah, and volatility that comes with it, but on an upward trajectory, I would say, per se. So that's what's happening with Biocon. But unfortunately, what the management is trying to do is they're trying to make Biocon into a holding company. So the best business of Biocon is Biocon Biologics, right? That they want to try and do an IPO or they're trying to get minority investors over there. So eventually, as shareholder of Biocon, we may not get the best deal possible over here. From that point of view, I'm not that optimistic on Biocon purely because it's getting turned into a holding company. The second company you asked about is Mankind. Okay, Mankind is a very unique company, and unlike the likes of Cipla, Dr. Reddy's, and the typical Indian pharma company, they focus on the Indian market, and not only the tier 1, but more so in the tier 2, tier 3 towns of India, where they try to build their brand through solid marketing with the doctors in that area. And they would produce brands which were cheaper than what was there by the larger companies. and very aggressive marketing. Again, solid investment in brand building. And they brought some very innovative products in feminine healthcare and different categories they try to open up. And their track record has been phenomenal. And I would say that as of now, because it is perceived to be like a total consumer-oriented company, its valuation also is premium, super premium level.
And hopefully we'll try and put a snapshot of Mankind's financials on the screen, as well as some of their PEs and returns, because I think it should highlight the point you're speaking about of a super premium multiple, because it's an India-focused consumables healthcare company.
That's right. And that's the company which I'm really watching, because that's the way to go in India. See, now in India, we are a population of 1.3 billion, and we are seeing the rising wealth effect. And if one expenditure which is going to consistently go up is expenditure on healthcare.
Yeah.
And if you have strong brands, more and more doctors prescribe it, more and more awareness of healthcare, then companies focusing on India who have very strong medical rep network, who've got a strong standing with the doctors, they are going to do exceedingly well going ahead.
It's really worth pointing out and noticing that India has a substantial underlying health problem, where the rise of sedentary lifestyle diseases like
Yes.
heart diseases,
Absolutely.
diabetes, and even cancers are very much on the rise, because it's unfortunate but true that only in the last 30 years have people had sufficient disposable income to buy a lot of garbage that they've put into their body.
Yeah, absolutely right. So it's all these pizzas and all the smoking and drinking and all.
Yeah.
That's going to, of course, too bad for the person, but it's positive for the pharmaceutical industry, unfortunately. And that's another thing. I think a company like Sun Pharma, to an extent, Mankind, they focused on these acute therapies, diabetes, blood pressure medication, neurological diseases, like Alzheimer's and Parkinson's. Because then once you have that disease, then you have to take the tablet for life.
Yeah.
And once you got the brand right, then you won't change the brand also. So
Yeah.
it's like almost you're hooked onto it. Person.
Yeah. So let's talk about Divis Laboratories, which is the third company you mentioned as something
Yeah.
you're looking out for.
So Divis Laboratories had a very interesting business model. And we started this podcast by saying that it's a industry where India has an advantage. Why India is an advantage? Because we got low cost of technical manpower, right? That's a big, and of course, local market. So Divis Laboratories, I would say, executed brilliantly in terms of supplying small quantity of product to the US market, which then used it for testing purposes. Like, for example, before you launch a molecule, you have to actually make the molecule and do the testing for it, right?
Mm-hmm.
So that's where they would outsource that actual manufacturing of that molecule to an Indian company like Divis Laboratories.
Oh, interesting.
It's called contract manufacturing, okay, where the US company wants certain quantity to be manufactured, and they identify a company like Divis Laboratories who they trust implicitly.
Mm-hmm.
And there are a whole host of NDA agreements to ensure that their
Of course.
formula is not stolen by anybody else. And of course, the Divis Laboratories plants also have to be completely US FDA approved. So they would make smaller quantities, many molecules, and export that to US innovator companies.
Right.
So they started supplying smaller quantities to innovator companies in the US. And that's a high margin business also. Requires a high degree of, I would say, chemical and technological strength. A lot of investment in plant and machinery as well.
Not to mention great relationships with the innovator companies.
Yeah, because they have to trust you with their formula. But it's a great business, and very few people have been able to actually crack it. But Divis Laboratories did it, and the results have been phenomenal. They've been consistently growing at 15-20% for last several decades or so.
So, for investors, where should pharmaceutical stocks fit in their portfolio? What is the future of pharmaceutical stocks, and how much of their portfolio should they be allocating to pharma?
See, I think in the Nifty about 4% weightage is there for the pharma. But I think that the industry is in a cyclical upswing. So you could go a little higher in terms of weightage. But pharma is a industry where you need to be extremely selective. And we started by saying that it's a difficult industry to understand as well. So I would say that if you're a novice investor, go with the pharma funds. You get a basket of pharma companies in a single unit. But apart from that, look for companies which have a differentiated business model. And he spoke about them, right? He spoke about Sun Pharma, Divis Laboratories, Mankind
Mankind.
Pharma.
Yeah.
So I think those are the companies with a differentiated business model that one should look for.
All right. Very interesting. Hopefully, our investors take your advice on board and incorporate pharma as part of their portfolio.
Absolutely. And one last thing I would like to mention over here is that we both are very positive on healthcare spends. But, and we spoke about pharma in this podcast. But from an investor's perspective, a very large segment which is coming very much alive to invest on this particular investment theme is hospitals and diagnostics as well.
Right.
So maybe just an idea for you to think about it for your next podcast.
Yeah, that's something we'll cover soon. But in any case, thank you so much for joining us once again.
Always
Thank
my
you so
pleasure.
much for sharing your thoughts. And hopefully, it adds some value to investors' portfolios.
This podcast is produced by Elixir Equities Private Limited, a SEBI-registered research analyst. Registration number INA 00004787. The information provided in this podcast is for educational and informational purposes only and should not be considered as investment advice. Investment in securities market are subject to market risk. We strongly advise all investors to read all related documents carefully before investing.